have my heart, we'll never be words apart. Maybe in magazines, but you still be the star, baby. 'Cause in the dark, you can't see shiny cars, and that's when you need me there. With you, I'll always share. Because when the sun
Alrighty, good morning, everyone. Happy Saturday, happy fucking halving. We made it another cycle. What's going on, Mercury? Long time. Happy to have you back on the stream.
Yeah, what's going on, man? Can you hear me all right?
Yeah, let me turn the background music down a little bit. It's always loud on my end. Hopefully it sounds okay. All right, man. What's going on? How's your week been? You surviving the war headlines?
Surviving, yeah. Cut a lot of my core positions near the highs. So at the lows, when we break down below high time frame trends, I'm always bullish at tops, but most alts are down like negative 20% still from my average exit. So doing all right.
Yeah, that's one of the things I love about you, man. That's like you're unapologetically bullish at highs, unapologetically bearish at lows. You respect your system more than I've ever seen anyone respect their system. You're just like, and I think I talked to you about this on our podcast last year, and I was asking you like, how much discretion do you have in your system? And you're like, well, the longer I've been in the market, the more I realize that the more variables I add, I think you said something along those lines, the less profitable I'm going to be long term. And I always think about that, like the longer I've been in markets, the more I realize that the more discretion I add, I'm just adding more and more variables of error. So I respect that about you, man.
Yeah, I appreciate that. Yeah, I always say I'm not the greatest trader in the world, but there's nobody on this earth who respects trends harder than I do. But yeah, man, I have a system. I know that it's foolproof. I've been using it for 4 years now. I've seen number go up. I've seen number go sideways. I've seen number go down. I've seen catalysts. I've seen news events. I've seen a lot in those 4 years, and I've navigated all of it. My portfolio's not too far away from all-time highs. So, that's very vindicating. I think that when you have a winning mindset and you approach the market and you actually win over a long period of time, you negate the idea that this is just variance, right? That I just got on a lucky streak and I managed to roll the dice and roll sevens enough times in a row. Sorry if you hear my puppy sleeping in the background. She's snoring.
No, I can't hear. That's adorable though. Man, I completely forgot what I was going to say because I'm thinking about the puppy now. But I remember. When you are building a system, you are learning and you're growing and you're building those portfolios, there is that like imposter syndrome that like grows alongside of it. Like how much of this is my skill set? How much of this is luck? And it's only like with time that you start realizing like, okay, yeah, my system's actually working, and you start trusting it even more, right? Your trust grows just with time in the system, right?
Yeah. Sorry, 1 second. I gotta.
No worries. Let's see who's in chat. All the familiar faces. I love that. A few new ones. That's always sick to see. If you guys could do me a favor and hit the like button real quick. I never ask, but I'm just gonna ask right
now. But yeah, man, as you said, I'm unapologetically just respecting my system, and it triggers people, and it's hilarious to see. And it's like, dude, I've been there before, right? I've been the guy who's the angry reply guy, telling people that they're not drawing trend lines the right way, or like, no, this is not a breakdown, or no, we're still holding a higher low on this time frame, or you're not interpreting the market structure correctly. I've been that guy, obsessive over, the technical analysis. But the technical analysis is very objective. So I always say that there should never be a reason why you don't know what's happening in the market, because at any given time, a 4-year-old knows what's happening in the market, right? Number go up, number go down. I mean, that's really all you can ever do. And then in between that, there's sideways, and a 4-year-old can understand that too. So I just create objective analysis, and I try to execute off of that analysis in about as efficient a way as possible. And that last part is really the tricky part. The TA shit, man, that stuff's easy. Right? Again, a 4-year-old can tell you which way the market's headed, but actually going and executing off of that in an efficient manner, totally different. So an example that I've been giving people is, I've been saying, hey, BTC is bearish on the daily market structure, right? And we've only seen this 2 other times in the past 9 months. Both other times they led to, I think it was like a negative 15 and a negative 10% drawdown. After putting in a lower low on the daily and losing 4-hour 200s, which is exactly what we're doing today. And people say, oh, but we're still bullish on the weekly. It's like, dude, where's the weekly market structure low? It's all the way down at 38K, right? So how are you efficiently creating value from making that analysis? You can't. So you have to use your brain a little bit. It requires a lot of critical thinking. I put out this massive like essay of a tweet. I don't know if you read it, Doc, but massive essay of a tweet going really in depth into the system. You know, my system is very simple on the foreground and on the forefront. It's just green and blue line go boing. But the simplicity on that end allows me the grace to spend more time on the stuff that actually matters, on the execution, on making sure that, you know, I'm achieving a state of balance so that I can just approach the market objectively. And, you know, if BTC does decide to reclaim 4-hour 200s in one, you know, 10% hourly candlestick, I'm not losing my mind, right? I still have like a way of going about that and you know, staying true to my system and adhering to the principles and the execution that got me here. So there's a lot that goes into it, man. It's super simple on the forefront, but that allows me then the ability to dig in deeper on the execution aspect. And I think any trader will tell you, trading is 95%, you know, execution and mindset and emotions and psychology, and then 5% technical analysis.
100%. So, I get asked this a lot now. So like people see my charts on Twitter and they'll be like, oh, are you using the MA or the, you know, the SMA or the EMA? And oh, how come you use this time frame instead of that time frame? And oh, you're different than Pierre. Why didn't you just do Pierre's? Like I get so many of these questions that I eventually just put out a tweet and I was like, look, this is what I use. It's a little bit different than Pierre and it's a little bit different than Mercury, but it really doesn't matter at the end of the day because execution is everything. All of like TA and charting and horizontal lines, they're just a guide for mapping out risk, right? That's all it is. That's not what trading is at the end of the day. Like you can have the best quote unquote chartist or analysis that can't trade for shit, right? So it's completely two different ball games. And I think people get too focused on like the semantics of like, well, which MA are you using or which EMA are you using, right? And I think you said the same thing back in your like starting days. People would be like, oh, well, the SMA is better and the EMA is better. And you're like, well, screw you, I'm just gonna use both, right?
Yeah.
Like I'm not,
yeah, that's exactly how I created my system. I see people like Pierre, man. I give Pierre a lot of respect. You know, every knee must bend, and I bend for Pierre. He's an absolute legend. But I can't use his system. It doesn't make sense to me. I can't break down, you know, one time frame. I can't look at one time frame and look at 7 different moving averages on one time frame and then give you a local analysis, a high time frame analysis, and a very high time frame analysis. I can't do that. So I have to segregate it via time frame. And then so I just use 200s, and then I pick a short term per trail, something that's nicely respected, you know, kind of like a line of best fit. And then I use that to ebb and flow, and I piece that puzzle together. You know, here's this time frame analysis, here's that time frame analysis, here's that time frame. When I put them all together, what is this chart doing as a whole? Right. And then I have context. I can create context for myself. So something like BTC, and I see that in the questions or in the comments, somebody saying, I think BTC is just headed sideways. I just see a range. Well, I agree with you, right? And even a 4-year-old agrees with you that BTC, when you're just looking at this price action from the past month or so, we are just in a range. But the context is we're in a higher time frame uptrend. And per my discretionary trading system, even though when we're over here, I don't know if you're looking at my screen.
I put yours on. Excuse me.
Yeah, even when we're over here, a 4-year-old still knows like, hey, relatively, this is just kind of sideways, right? Even before this breakdown, relatively is kind of just sideways. We're in a range, you know, somewhere between 60 and 70K. But my trend system remains totally valid the entire way through. So that means that, you know, a trend style analysis remained applicable for the entirety of that, you know, even when it was still relatively sideways. So when that breaks, I kind of got to respect it and, you know, assume downtrend. And so far, so good. -8%. Woohoo. Right. Yeah. Nobody cares about -8%. We already relief bounced back into, you know, where that daily structure broke. But when you're going to apply the exact same thing for something like Solana, right, which is another big, heavy spot position that I had, this is the uptrend that you're talking about. Right. And then that's where that structure breaks, and that's where that trend breaks down. And then that's a -30% drop thereafter. And you would do the same exact thing for something like DOGE. Right, same exact kind of gist. So this is that high time frame trend. These are all 4-hour 200s daily structure. Very, very simplistic, straightforward kind of thing, negative 25% drop. Another one of my bigger spot bags, RNDR. I cut this many weeks ago. And, this is where that trend breaks down. 4-hour 200s, daily structure, break down below that range, and then negative 37% drop, right? So it's not a coincidence that we're getting these much drastically deeper pullbacks after key structures and key trends that have not broken throughout, 200% rallies finally break. I don't think that's a coincidence. I think that is, if we were ever going to get that, then you have to break down below those key trends. You have to break down below those key levels. You have to shift structures bearishly, right?
Yep.
So all those things happen. I assume that we allowed for something greater, and then the market's very kind to me, and that's exactly what happens. So that I'm basically in a position now where no matter what happens next, I win. Because even if we start reclaiming trends, I have the grace of adapting at a drastically lower, price point than where I just recently exited. And if we continue going lower, then my system continues to reward me. It won't just be a negative 37% drop. It might be negative 50, right? So that's kind of the way that I like to approach markets, is like always feeling like no matter what happens, I'm always going to win. And I'm not reliant on the market. I don't need a bottom to be put in. I don't need RNDR to keep going lower to fill my bids at $5. Right? I don't need either of those things to happen. I can just, be very objective and very fluid in my approach and adapt to whatever the market gives me. So yeah.
Yeah, 100%. I look at this as like a big opportunity period, right? My system is very similar to yours as far as the H4 200. We both have that as like a core part of the system, high time frame trends and like daily bias. And every time I see a, H4 200 loss, my brain goes immediately, okay, we're going to get a daily 100 tag. And for me, that's the moment where I get super defensive, right? I'm willing to acknowledge the strength of the H4 200. When I start seeing market structure breakdown, lower highs put in, more distribution at highs, perps leading spot, no spot TWAPs, like all this kind of stuff is very frothy. You have like a racist meta in like Solana, and you have like all these top signals firing off. That's where I'm like, okay, maybe this is the time where the trend breaks. Right. So you can get risk off there before the trend breaks. And then you just get these beautiful gap fills in crypto almost every single time you get the H4 200 loss. You get something along the lines of a daily 100 tag. So like that's helped me navigate this market so well for the last 6 months. When we had like our last summer breakdown, when we had, our ETF sell the news, it was the same situation. And I feel like it's the same thing right now. The difference being is how hammered and how clobbered alts got. And I think because of that, the sentiment is shifted from like a month ago with Bitcoin at 66K that we're going to 80K and we're going to 90K. And today Bitcoin at 66K, everyone's like, well, we're, the cycle tops in, we're going to zero. Well, you're not really analyzing Bitcoin. You're looking at your basket of shit that you're holding that's down like 60 or 70% and trying to gauge like the driver of the market based on your shit coins. Well, I don't think that's going to serve you very well in the long run. But TLDR of that whole ramble, I think this is an opportunity, whereas like a month ago I was pretty skeptical and I was like, all right, this is time to risk off. I think this is the time to be looking for opportunity in the market again. And I'm pretty thankful, for this one and for, like coins like Render that I sold in the 12s, and it was not a popular thing. When I tweeted out that I was taking profits on Render, I had like reply guys going like, how are you going to sell in the middle of an AI bull market? And I'm like, well, I don't think the evolving R makes sense anymore. Like if my entry was at $3 or $4 and my target's 14, if we're trading at 12, it really doesn't make sense just to hold on for another 10%, right? And then you get these big corrections in the weekly trends. And I feel like this is a blessing. I feel like this is an opportunity for reaccumulation. But like you said, like always the metaphor that I love that you use is the snowball into the snowman metaphor. And it's like, well, yeah, we're holding weekly trends, but we still need to reclaim daily trends. And until that happens, expect chop and expect range and expect, volatile movements in both directions. And for bulls stops to keep getting run. I think that's the environment that we're in right now.
Yeah.
But nonetheless, opportunity.
I always think about it as like a tug of war, and I have the whole snowball to snowman analogy is in reference to like perceived probabilities, because in markets you don't have the ability to say, oh, this is a highly probable outcome, right? That's not a real thing. You're just making that up. So we don't have the luxury of, this is blackjack and I can give you a standard deviation of the probability of the next, card being a 10 based on how many 10s are on the field or on the board right now, right? I don't have that ability. We can't do that. So it's a perception kind of thing. If we were ever going to go to all-time highs in price discovery, well, you got to be uptrending on all time frames before you can do that. So as those arguments start to come into fruition, I skew my perception of the probabilities in favor of that outcome, and then vice versa. And it's just a constant like tug of war, push and pull. So I can say, from my discretionary opinion, because we're uptrending on all time frames, I think there's an 80%, perceived probability that RNDR goes into price discovery, where somebody else might say, there's a 99%. I would hope we're never saying 100 or 0, right?
Yeah.
I watched oil futures trade at negative $40 a barrel 4 years ago. So I would hope that nobody is like unable to fathom something or guarantee something to happen. But that's just one concept, right? That's just discussing perceived probabilities. There's so much else that goes into it. But yeah, so that's one of my favorite analogies too. And that's one that people kind of recognize me for. And I've seen actually kind of get thrown around on crypto Twitter, which is pretty cool. But yeah.
One question I had for you, is there anything in particular that you're focusing on at this point, or are you going to allow the market to tell you what the strong sectors are again? Or are you going to like try to say, hey, well, I want to reposition in AI because AI puked, or memes, or etc.? What's your strategy for what I look at that? This is like the second half of the bull market coming up. Do you have a strategy, or it's like more like let the market come to me?
Yeah, so the initial strategy is usually just focus on the outperformers of which were previously outperformers. And if that doesn't work this time around, that's totally fine, because like you said, I've been focused on render for a lot of this rally. It's been an outperformer, and even when it drops, to a deeper extent and breaks a higher time frame market structure or trend, I'm still focused on it, just because if strength is shown again in the market, it's likely that the outperformers from prior will probably continue to outperform. So things like INJ, Render, Solana, Pepe, WIF, Doge, all those outperformers, all the things that people were talking about for good reason, right? Don't sit here and overcomplicate it. Oh my God, my entire feed is a counter trade indicator. They're all discussing the same thing. Well, yeah, because it's going up. Right? It's going up a ton. I would hope that your feed is discussing the same thing, or else like, dude, get a new Twitter timeline, right? What are you doing? But yeah, all those things that, everyone kind of knows when you think about, oh yeah, this coin had a crazy rally. Oh yeah, FET had a crazy rally. Oh yeah, you think about those, that's going to be where my focus is at. But in terms of like high time frame, so when we talk about render still being, high time frame weekly market structure is still bullish. Oh, it could still resume price discovery. It just needs to reclaim local and high time frame trends. So that's like very, very high time frame. Render, in my opinion, could still go lower, and it would still be bullish. And that's kind of fortunate, but also unfortunate, right? That there's such a wide gap in between, daily market structures breaking and weekly market structures being maintained. There's such a wide gap of white space where not really much is happening. So we can look for deeper drawdowns, and that thesis would still be applicable. I would still be watching, the previous outperformers. But when it comes time to start pulling triggers, I'm going to focus on the things that are actually, reclaiming trends. And, BTC is still stuck below 4-hour 200s, but look at Solana, it's reclaiming 4-hour 200s, right? I want to look for that relative strength the same way that I was able to identify that relative strength, to begin with from several months ago, and then kind of just kept rinse and repeating. Like, okay, we had a massive wipeout. Well, I'm still going to focus on the things that were previously outperformers, and then I focus on them, and then they continue to outperform, and then we do it again, and we do it again, and we do it again. So that's the idea. That's kind of like the foundation and the launch pad, and then from there, I'll look to identify relative strength. And then I will, because I have a very straightforward way of identifying relative strength, then I'm inevitably going to find myself on whatever the newest, hottest narrative is, right? So when people are talking about AI coins, I'm looking at RNDR, right here, and I'm like, oh yeah, it's reclaiming 4-hour 200s, is breaking out of a range, and it's shifted structure bullishly on the daily chart. yeah, I like RNDR too. So I buy some RNDR. And it's just that over and over and over again. But yeah, it's just the foreground, focus on what was previously outperforming, and that might give us a little bit of a head start and get us in the right direction. But really, we just want to identify relative strength.
Absolutely. I agree with you there. I did one thing this time around is I've actually placed my own bias on the market and been like, look, the sectors that have outperformed the first half of the cycle may not be the exact same sectors that outperform in the second half. You know, we saw that in like 2021, where the first half of the cycle was dominated by Exacoins, and the second half, which like the double bubble part, was like the Soluna AVAX part, right? Which not a lot of people saw coming on the first half. And obviously some people had foresight, but it could be the same dynamic this time around. So like if you're doing what I'm doing, which is like basically betting on, you know, first half of the cycle winners, the renders and, you know, the ondos and stuff like that, you're taking a chance to like underperform. But that's kind of what I did right now. Like I'm opening up the possibility that I could underperform the new leaders of the market, but I'm just picking the old leaders of the market at the current time being. Yeah, exactly. Like Solana too. Like I picked up a bunch of Solana there at like 132 average, not the best average, but still, you know, after selling near the highs, it feels pretty good to be able to buy much lower.
Oh yeah, absolutely.
Yeah.
Somebody asked, they read my long form post and did I take the Solana trade? Yeah, I did take the Solana trade just now, just before entering the stream. I bought this reclaim of the local trend. I'm looking for push higher into this little range high, what might be a range high. It's a little local resistance, but also a bearish retest of 4-hour 200s. And I'm going to look to maintain some of that position just in case we do reclaim these 4-hour 200s and Solana gets to run it back turbo all over again, just as it did back here. So that's the thesis. And if it breaks down, I take that loss. It is what it is. Solana probably goes lower from there. I would imagine at least into this range low. And then you have another opportunity to buy a more defined, you know, range low, or maybe you can buy this demand zone. Or maybe you can buy what I'm deeming the inflection point, the 200 dailies. That's what I'm watching for Sol. But yeah, so that idea, that thesis on a lower time frame has triggered. And that's the best way for me to maintain my balance, is to look for some kind of local exposure. None of this might make any sense if you didn't read my long form post yesterday, but yeah, it's essentially just taking a local trend trade. There's something else I was going to say. Oh yeah, the only kind of like play that I had on this drop, the only button press that I did was I set a bid for 120 Solana and I sold 140 on the immediate relief bounce.
Very nice
bounce. That was it. That's all that I did. I haven't taken any trades since then, bar the one that I just entered, I kid you not, an hour ago. I've just been chilling, playing with my puppy. So.
Do you were you at the desk when the headlines went off on Saturday when everything puked 20-30%, or were you like just enjoying your weekend?
So actually I was in the middle of a live stream for my private Discord.
Okay.
As that was happening. And it was funny because we were discussing, and I started off the live stream. Usually my streams in there drag on for like 2 or 3 hours. And I started off the live stream like, guys, Solana's breaking down below 4-hour 200s. You know, we got to talk about a lot of weakness in the market today, blah, blah, blah. And it was like over here. And then by the time the stream had ended, it was already selling off. I was like, oh, like it was all the way down here. I was like, oh, well, that's not great. I mean, I did mention this, you know, 2 hours ago, but yeah, it's significantly lower from where we talked about it. But yeah.
Yeah, on Friday was when we got that first puke, right? The 174 to like 150 puke on Solana, right? And on Saturday, I was playing video games with my friends, and one of my friends is actually, you know, he trades crypto as well, and he's like, "Hey, Doc, you know, what do you remember trading when Russia invaded Ukraine?" And I was like, "Yeah, man, that was crazy. Like that was a big puke. I woke up, etc., etc." And he's like, "Well, it just happened again." And I was like, "What do you mean?" And he's like, "You haven't checked your phone, have you?" And I looked at my phone, and there's like 14 trading view alerts, and I looked at it, and everything on my list was down like 20 to 25%. And I was like, I'll be right back, guys. You 2v3 this next game. And I went and I just bid a bunch of stuff, and I came back and I was like, all right, let's go play video games again. Like, no big deal. But
what game were you playing?
The finals. It's
okay.
It's for PS5 game.
Dude, everyone in that game is so sweaty. I bet you're one of them.
The finals, dude, I'm trash. It's
yeah,
like
okay.
My friends make fun of me because they're like, "This is the worst you've ever been at a video game," and I'm like, "I agree. I agree. I'm trash at this game."
Yeah, I'm right there with you. Sorry.
Yeah. Anyways, I think it's funny that the longer you're in markets, the sillier the impact becomes of these nukes, right? Like, I remember when Russia invaded Ukraine in 2022, I was literally shitting my pants. I was like ready to bid those lows. There's like a big sweep on Bitcoin. Let's see if we can find it. Let's see right here. It was a big sweep in that like Luna range right before Luna broke down. I'm on the wrong chart. And I got filled overnight. I was in my internship, and I got filled, and I woke up and I was like, "Oh my god, like let's go, like here we go." I got my entries, and I puked it immediately when I saw the war headlines. It was this one right here. It was this wick right here, and I just puked it at the bottom. And I was just playing the range like, this is my range high, this is my range low, this is all the liquidity. Let me get in on the sweep. Got in on the sweep and puked everything. And then I realized, this time around, going, learning and bridging from that experience, and I'd seen it many times, obviously, over the months and years since then, but news headlines just takes price where it was going to go anyways, just a little bit quicker, right? Things are already bearish, things are already in a downtrend, and when you get like headlines like, I think we got one, Wednesday, right? Another headline that was something or another about bombs. I don't know exactly what it was. I don't want to make light of the situation or anything like that, but for the purposes of trading, it was a bad headline, right? And it was a place I was looking to bid anyways, and just a big learning moment from that Russia and Ukraine war, that like you get your entries, you take them regardless of the fear that they come with, right? And the more drastic and the more velocity the selling is into your locations, the more likely you want to buy those locations probably. So yeah, it was a good week for me.
After the news event, I put out a tweet saying something along the lines of, the market didn't go down because of war news. The market went down because there were more sellers than buyers. And I said, what you said is speculation because you're saying the market went down because of war. But what I said is fact. Yeah. The market has to go down. The only way the market goes down is if there's more sellers than buyers. So people took that, and some people, it clicked, the point that I was trying to make. And some people took it and said, "Oh, what do you mean? Yeah, it didn't go down because of war. Yeah, we didn't have March 2020. It wasn't because of COVID. It was just because there was more sellers." And it's like, dude, you're missing the point. The point is, there's going to be news events that affect the market all the time. And they're going to be sporadic and they're going to be random. And there's no way you can possibly predict them or comprehend them, right? If you spend your entire life trying to understand every possible thing that could ever possibly affect markets, you're going to be on a wild goose chase for eternity. You don't live a long enough life to understand geopolitics and, science and pandemics and this and that. It's not possible, right? So what you can understand is number go up, number go down. That's it. And if you make sense of that, then the sporadic, news events don't really affect you as much because you can make sense of it all. Right. So you're going to sit here and tell me the market went down because of war. I'm going to sit here and tell you, well, we had a downtrend, right? I mean, a 4-year-old knows that's a downtrend. This is a lower low. This is a breakdown below a range. I mean, I can give you an analytical, from a TA standpoint, I can give you reasonings as to why the market went down. And then you can give me, your speculation. Oh, well, it's because, the news event. It's because of this. It's because of that. It's because of COVID. Right. But if I'm just adhering to whatever the market is doing, I'm just being fluid. Right. Bruce Lee said, be like water, not underwater. So if I want to be like water, I just got to adapt to whatever the market's doing. So if the market's going down, then sure. If a news event comes out and the market goes lower, then I should have known that. I should have expected that. Right. It's very logical. The irony is that a couple hours after that, some news came out that the missile was like fake or whatever, and then it started creating all these conspiracies, and I was like, okay, well, if the missile is fake and the market is going down because of the war events in the news, then how come we haven't bounced? How come this is what happens immediately after, right? So it's like, is it really because of the war? I mean, and obviously we know the answer, right? We know the answer. Yeah, it was because of the war. That's that, that catalyst. That's what caused that reaction. But if that's the case, then you would think that news coming out that says, oh, by the way, that was like, misinformation, would actually send the market higher. You would think that we would retrace that rally and run it back turbo, right? But we didn't. So was it actually because of the war, or was it just because there's more sellers than buyers in the market right now?
Yeah.
And then, it's like,
Yeah, I think the way that I look at it is like when trends and market structure breaks down and everything like that, the bears are in control, at least locally speaking, right? Price is going to go where it needs to go. People are going to bid where they want to bid. Like for Bitcoin, people want to bid 60K, right? That's where everyone's going to stack their bids. Whether or not it takes 3 weeks to get down there because everyone's PvPing on the 10-minute chart or 15-minute chart on Bitcoin, and we get wicks in both directions and we get there and we crab there, or there's a news event that just nukes everyone's positions because the algos fire off and all the hedge funds have to, hedge their positions and stuff like that. Whether we get there in one candle or we get there in 2 weeks, like we were going to get there anyways, right? So I actually look at it as like a blessing. It's like, well, we just got it over with, right? Of course, it's the same thing, more sellers than buyers, but I think the news just helps you get there, right? And it's a form of what I like to call news absorption, where the market eventually gets sick of hearing the same headline again and again and again. And whoever sold the first headline, or maybe they sold the second headline, or they puked their positions eventually, or they decrease their risk at some point, eventually you're going to run out of people that need to sell their bags, or people that need to capitulate, or positions that need to be force closed. Eventually you run out of that, and the headlines or the news can no longer impact price the same way it did in the beginning, right? And I look at that as maybe a divergence between fear and price, or a hidden hand, a buyer of second order coming in to absorb some of the selling. So I think we saw a little bit of that this week. I'm not saying that like, hey, the Pico bottom is in. If you didn't buy it, you're screwed, right? I don't think anything like that's going to happen. But I think that the headlines or the news and the war impact may decrease a little bit versus the initial impact that we saw 7 days ago. That's the way that I see it right now. I think the second case that can be made here is like, let me open the Bitcoin chart once again. We are coming back up into like resistance, right? If we're just speaking locally, come back to the 4-hour chart, right? Nice bounce off of range lows, entering a bearish retest of the daily trends, right? The same daily trends that carried us all the way from the ETF sell the news that we've been holding, right? The H4 200, bearish rejection here. Is this where you want to be max risk on, or do you want to wait for that to be reclaimed? Right. I think a lot of people right now are in this mental headspace of being super, super scared a week ago and 5 days ago, and even, on Thursday and Wednesday. And they're looking at this right now like, oh my God, I missed the bottom. I need to chase. And I think, the people that chase here need to be rinsed one more time. I wouldn't be surprised if we came all the way back to the lows and just rinse the people that buy this top and then look for that bottoming structure. That's kind of my bias right now, is like, it's super fun to play this volatility, but this is not where I want to pack on the risk, right? I would rather miss this area just like I did with the ETF and buy a little bit higher, right? Just play the range. Like in a trending environment, the psychology of a trend is like everyone gets rewarded, right? Or bailed out, right? If you buy a high, it's like just hold, in 2 or 3 days, you'll be fine, right? But in a range bound market where trends break down, you can't attack the market the same way. You can't just buy the highs and wait. You are going to get a little bit more screwed.
Yeah, I like that. No, it makes a lot of sense. What I will say is, don't freak out so hard about missing out on a Bitcoin move or whatever. I gave a nice rough draft of how I was looking to play something like a local trend into a higher time frame trend, bearish retest, and try and scalp long, or maybe even maintain a position just in case that high time frame trend was reclaimed. So we just got done discussing that on Solana. That's not really all that applicable on Bitcoin, because the amount of white space that you're talking about is like a couple percentage points. So if you want me to be honest with you, and I've been very transparent about this, I've not traded Bitcoin once since July of 2023. And there have been several factors that go into that decision. And it's kind of weird for me because historically, 70 or 80% of my wealth has just been generated from swing trading spot Bitcoin positions. So it's a totally new thing for me, but I've really adhered to the idea of relative strength. So finding coins that are contextually in the same kind of environment as Bitcoin. So something like Solana, something like DOGE, something like RNDR, but will likely outperform just simply because they're higher beta. So they're showing the same amount of strength, or they're showing greater strength than the alpha that we're pertaining things back to. So haven't been able to justify going and putting positions on BTC for that reason. And also for the simple fact that I already have Bitcoin exposure. It's not from a trading standpoint, but it's from a ledger standpoint. Yeah. And I understand that I have an emotional attachment to Bitcoin. You know, as stoic as people might perceive me or may not, maybe I just made that up. But, you know, people are like, oh, wow, this guy really has this hard, you know, system. Dude, I was a pansy. I was an emotional pleb getting whipsawed by the market. Every time Bitcoin would go up 3%, I was freaking out because I, you know, didn't catch that 3% move. Every time it went down 3%, I'd be freaking out because I had too much Bitcoin, right? And I know that. I know that I have that emotional attachment to something like BTC. And I don't think that a lot of people acknowledge that they do too. So if you go to my screen, I'm not sure. Are you on my screen?
Yeah, let me go to it.
When you go to my screen, all the way back here, I caught this move into BTC. So it was a reclaim of the range low, and it was hourly 200s being reclaimed. And right after, or right before that, we had come off of a 200 daily moving averages bullish retest and demand zone confluence. So it was like a high time frame inflection point. I didn't bid this region. I decided to wait for local strength to be reclaimed. And then from here, I get to target the next inflection point, the next like key resistance level on my chart. And during this move, somewhere over here, I kid you not, I got like 5 or 6 messages from different people that said, hey, Mercury, if you missed out on the Bitcoin rally, what would you do? Right? Bitcoin's up 10, 15%. At the same exact time, Bitcoin Cash is up 100%. Right? So BTC rallies 10, 15% in like 2 or 3 days. Bitcoin Cash is up 100%. I had 5 or 6 people message me, hey, Merc, what would you do if you missed out on Bitcoin? If you feel underexposed to Bitcoin, you don't own enough Bitcoin, what would you do? But nobody asked me, hey, Mercury, what would you do if you missed out on Bitcoin Cash? Right? Why is that? Because nobody has an emotional attachment to Bitcoin Cash. Nobody cares. Right? So you have to give yourself the luxury of being able to not care about this asset that you're constantly trading back and forth the same way that you don't care about Bitcoin Cash. You don't care about, you know, a random tech stock moving up 300% because of its earnings, right? You miss out on that stuff every single day. You don't care about it because it doesn't bother you. It doesn't affect you. You might not even know that it even happened, right? But when it comes to BTC, oh my gosh, it's the worst thing in the world. If we have to wait until after BTC breaks out of 72K to start bidding the trend and then look for pullbacks, and then, oh my gosh, it's the worst thing in the world. Dude, calm down, right? I thought we were all profit maximalists, right? I go to somebody's crypto Twitter account, I click on their account, in their bio it says profit maximalist. Okay, how are you a profit maximalist if you're freaking out over a 5% move on BTC, but you just missed out on a 20% rally on Solana? Right? How does that make any sense? And it doesn't. So you have to start to adhere to more logical sounding, approaches. And then you give yourself the grace of being able to just ebb and flow with markets at that point.
Yeah, absolutely. I think also, the 2 things that you could, draw from that is people should focus on their own competence. They should focus on their own skill set. They should build a skill set so you're not always at the mercy of the market. That's number 1. You build confidence in yourself. You don't have to worry. It's just like you said, you don't have to worry about what Bitcoin's doing. You know that there's opportunity everywhere. And the second half of that is there is opportunity everywhere, right? If you miss Bitcoin, you have Solana. If you miss Solana, you can buy something on chain. There's always ecosystem plays. There's a new narrative forming, right? There's cycles, there's seasonality in crypto nowadays. So, don't freak out about a 5% Bitcoin move. Even if you're not exposed down here and you're waiting for trends to reclaim, you can catch the bulk of the move. It's just like me. Like, I'll give this example here on Prime, right? I've been waiting to get filled at the daily 100 EMA confluent with some demand on the daily for a long time, right? I've been risk off on Prime, and I'm just like, look, I may get lucky enough to get filled here, but I'm not chasing it, right? One of 2 things. Either I get filled lower, or it's going to reclaim daily trends and I will play it higher, right? Either you reclaim market structure, either you reclaim daily trends, and I'll just bid higher, right? Into a fresh daily trend, or bid lower. I don't need to do anything in no man's land here. This is where I believe tons of people lose money, right? Because at the lows, your bids get front run, you get emotional, you chase the highs, it just drops right back down to where you were going to bid anyways, right? I think everyone can relate to this, being, doing this at some point in their career, whether they're doing it now or they did it, last year, the year before. This is something that I was doing in like 2022. It's just being so emotional in these chop periods that like, I want to get filled here. Oh my God, I missed it. I need a chase, get trapped at the highs, right? Those kind of things I think everyone can relate to. So something like this on Prime, my plan is just simple, like reclaim support, reclaim daily trends, reclaim market structure. I'll just buy it higher, right? If not, I'll buy it lower. I don't need to concern myself with this chop period.
Yeah, there you go. And man, I say it all the time, opportunity is abundant. And it's not like, I've had some of the greatest trades in my entire career within the past 6 months or so, because the past 6 months have been very abundant with opportunity. But it's not like I was planning on buying RNDR. It's not like I was planning on buying INJ. I wasn't, plotting to buy Doge. I wasn't plotting to buy, Solana at $30. It's not like I was waiting for that opportunity. It's that I'm in a sector of finance where opportunity is so damn abundant that it just comes by so frequently, and it's inevitable that you're going to catch something. Right? As long as you have a way of sustaining and allowing yourself the ability to take advantage of some opportunities, then it's kind of inevitable that you are going to get quote unquote lucky, right? As a byproduct of being consistent and dedicated and level-headed and persistent. So yeah, I mean, it's not like I'm not waiting for my greatest trade of all time. It just kind of comes, right? And you see the setup start to come into fruition. You see the opportunity. You place that bet and you walk away. There was something else I was going to say. I forgot.
On that note, do you want to share some of like the highlights and lowlights from the bull market so far? Some of your own personal like favorite. Maybe it doesn't have to be your highest P&L trade. Maybe it's like a favorite trade or a favorite moment from the last 6 months that you experienced.
Oh, man, I went heavy into Doge on that rally. That's probably, so I think Doge is one of the better trades in my entire career. I still think the greatest trade of my entire career is buying the absolute pico bottom on Bitcoin here on this March USDC DPEG, which is ironic because it wasn't even supposed to be a trade. It was just, I was afraid for my life. And I didn't know what else to do with my money because my stablecoin, I primarily hold in USDC. So my stablecoin was depegging. I don't trust USDT enough to put 100% of my stablecoins in USDT. I couldn't move my money into a bank account because at the time banks were also going insolvent. They're only FDIC insured up to a certain amount. And BTC looked like it was downtrending, right? Per my system, this is a downtrend. So there's no reason I would ever buy this region. I'm not a bottom, buyer. That's not my thing. So I just so happened to, hey, how's the best way for me to survive this, as a crypto participant? And the answer was, well, just buy the Bitcoin. This is literally what it's created for. And, stomach the drawdown. If it goes lower, then, oh, well, so be it. But at least it's better than, risking USDC going to zero. Yeah. And so I just threw a big chunk of my net worth, because again, I'm fully stabled at that time because everything's downtrending. So I just throw a big chunk of my net worth into Bitcoin and then it rips 40-50% in the next, week. So that's still the greatest trade of my entire career. But I had a really, really nice play on Solana from 30 to 80. I had a really nice play on Solana, or I'm sorry, I kept trading Solana, back and forth, on its way into 200. I had a really great play on INJ. This is such a clean setup. This is one of the cleanest setups I've ever seen. This right here, where it's range lows with high time frame trend confluence. So I've been watching INJ since all the way down here when it started to shift that trend. This shook me out. Yeah, shook. It shook me out. So I actually got stopped out on that. I was scaling my assumptions and saying, okay, well, we lost 4-hour 200s. We both rebroke that market structure low. So that probably means we're going to continue downtrending. And then INJ was like, nope. And then I ended up missing this for, I don't know, whatever reason. But I missed that entire rally. But INJ buying 4-hour 200s on the next test after it already kind of, rallied 100% or so. Yeah. And then formed this range low. I'm not a range trader, so I don't buy this test. But I bought the Pico bottom here. Pico bottom. And then that was my reward. So that was an amazing trade. the RNDR trade from 450 into, like you said, 13, and then I'm selling fib extensions on the way up and then cutting upon high time frame trend loss, and then range low breakdown as well as that's happening. And then Doge was a high conviction play for me as it was breaking out of this 10-cent region. I know a lot of people know the tweet that I'm referring to, where I was discussing historically what has happened in the previous cycles is as BTC reaches all-time highs, Dogecoin gets kind of like an impulsive rally, just all in one quick motion, just like plays catch up and goes 200% higher or whatever. And I was kind of calling that, I was labeling it as this is an indication for retail greed coming into the market, right? And BTC tapping a new all-time high, creating a new all-time high is what has triggered that retail euphoria and greed for something like Dogecoin. So now Dogecoin is actually a good bet. That was really high conviction for me. And again, 100% move in the next week. So those are all like killer trades. I made out really, really well on those trades. And Dogecoin was something where I didn't take like a ton of different positions. So I don't have like a bunch of cool stories and different tickers, but Dogecoin was something where hourly 200s break here, right? So hourly 200s breakdown allows me to anticipate a deeper pullback into higher time frame trends. So you lose local trend, it's that snowball to snowman. You lose local trend, you now have a snowball that then allows that snowball to try and keep rolling down the hill and build its way into a bigger snowball, right? And if it's not going to do that, this is the inflection point of which things will start to reverse. That's at least the speculation, because it's the same high time frame trend from prior, right? So I kept doing that. Hourly 200s breakdown. All right, any profit that I took on the way up, add it back here.
Yep.
And then reclaim. Beautiful. Lose hourly 200s, add back, and then reclaim. And then that time it didn't work, so I cut that position. But just back and forth on those plays. Something like Dogecoin, initial 10-cent entry, and whatever 120% unrealized rally. I think I probably got more than that, more than 120% on my gains after everything was said and done. That was a really bulky trade in terms of position size, because I do scale my position sizing dynamically with my conviction. So if I have high conviction in something, it makes sense to take a bigger bet. If I'm not so confident in it, it's just it's kind of a solid setup, that I might put on a regular standard kind of a bet size, or maybe even lesser.
Yeah. I'm curious now, as far as like Doge goes, do you think that has your conviction changed in Doge? Do you want to speculate on the new and shiny like dog with hat from this like breakdown point of view, or do you want to stick with Doge being the outperformer?
I think that I really do think that I am biased towards Doge at this point. Just because it has made me so much money. It's been kind of like my baby, right?
Yeah.
And
we all fall in love with the bags that make us the most money.
Yeah,
sure.
yeah. I spent so much time bull posting about it on Twitter for damn near months straight.
Yeah.
I was very, very loud, and kept getting told that my entire feed is saying the same thing for all of this 150% rally or whatever.
Hey man, my feed was crazy with the Doge at the middle of this. It wasn't crazy at 8 cents or 10 cents, but it was crazy for that second leg, right? The first correction into your, I think this is 4 hourly 200s, into that second leg. My feed was going nuts with the Doge bull posting on that leg. And I was like, guys, where were you? Right. I was like, where were you for the 200% move that we just had?
But they were right. Everyone was right. It went up. It went up so much higher. It went up. It had like a 75% rally or something.
It's just one of the things that I like to use is like no one's ever there for the first leg when there's the most juice, and then all the voices get super loud for that second leg, right? And that always concerns me. I don't know if it's a viable strategy over and over, but it's something that's helped me out a lot. Is like the voices get really loud when momentum starts stalling compared to the first leg. right? I think that's like people like there's always this divergence in confidence and momentum, right? You have so much momentum early on and people are super skeptical and they're like, nah, this is not going to go higher, this is stupid, etc., whatever, it's overextended, I'm not going to buy this trend, I'm not going to buy, you know, the 15-minute 200s or whatever that first leg was. And then everyone wants to pile into the second leg, everyone wants to pile in later on, and they go, oh well, this is a nice 20-30% pullback, you know, and let's get super bullish right now, and you don't get that same momentum. But the voices get louder. I think that's like a very, very strong commonality in crypto.
Yeah, I also think that a lot of people probably found themselves overexposed at the highs. I think that the market has an uncanny way of lulling people into getting more confident as prices go higher.
100%.
But something that I really, really try incredibly hard to get across to people is from here. So this is high time frame trend for Doge, right? And we can see trend, right? So we have that trend, but context hasn't changed because we're still stuck in like a 2-year long range, bar this one exception, right? Which we can just write off as a deviation or a bull trap or whatever the hell you want to call it. So when we start breaking out of this range, the context has changed. So now we're breaking out of a 2-year long range and we have the trend as kind of like wind to our backs. So I am just as confident in my Doge thesis here as I am here, right? So I'm bull posting at the very pico top because I was with the same adamancy and conviction and confidence that I was since the low, because all of that contextually, nothing changed, right? It's all the same market. It's all the same trend. It's the same leg upwards. It's the same context. Everything's exactly the same. So you have to have confidence in your system from the get-go in order to allow yourself to be able to be bullish at the top and then not really care if you're bullish at the top. And that way you're fighting off a lot of the anxiety and paranoia of, oh my God, is this candlestick going to be the top? Oh, is that the sweep of the high? Is this like, dude, you don't have to freak out. Like, what do you mean? You're still making the same argument. Nothing changed, right? So that's a really key concept. But to go back to your question, I think that focusing on Doge is probably going to be what honestly makes me more money, as opposed to if I went and like traded WIF. I do think WIF is an outperformer though. Yeah, so I mean, WIF looks a little bit better than Doge, I would say.
Yeah,
because if it breaks out of this range, then this thing's probably sends all over again.
Crazy.
But in my honest, humble opinion, I probably do better trading Doge. Even though it's less volatility, even though it's going to be the thing that underperforms technically, I would be able to trade it a lot more comfortably just from my own discretionary opinion. The way that, I don't know, just the way that I feel. I can't describe it to you. But I would be able to I think there's a term for this.
There's a lot to be said.
Risk adjusted or something? I don't know.
Yeah, there's a lot to be said about, having size that meets your conviction, right? So something I've tweeted out like the last 6 months again and again is like sizing into your high conviction play is much more meaningful than chasing shitcoin of the day. Because whenever there's shitcoin of the day, you want to be exposed to it, but how much of your capital do you honestly feel comfortable putting into it? If you don't understand, if you feel shaky with the risk, if you're able to put 100% of your capital into Solana at $20, you're going to outperform someone putting 1% of their capital into WIF, right? Because, WIF may give you 100x, but Solana is going to give you a 5-10x with size, right? So I think that's one of the things that you're talking about here with, WIF versus Doge. You may have much more conviction, which allows you to size into Doge appropriately. And you may not have that same conviction on WIF. So you may have exposure, but at the end of the day, if you're only putting in 1 or 2% of your capital into this, what is the actual outcome and return going to be? It's probably not going to be that important.
Yeah. As Goku XBT in chat just said, being mentally comfortable is very important. Being able to sleep. Yeah. I don't want to have to, be falling asleep at night watching my TV show and worried about, what is WIF doing? Right? If I'm in Dogecoin, I don't really have that feeling, but if I'm in WIF, I might have that feeling. So that's just an example. With that being said, this is a really clean trend. This is super clean. This is textbook local trend trade into probably range highs from here. And then look what happens from this inflection point. But yeah, man, it's not always just, I want to focus on the relative outperformers and the on the outperformers that are showing relative strength. I want to focus there, but it's not always, oh, you're not in the strongest coin. That's, this is the strongest. Dude, it's not that serious, right? As long as I'm making money and portfolio number go up, then it's all good. It is what it is, right? I don't need to be in the top performing asset 100% of the time, because then, like you said, you're probably just going to be, getting tossed around back and forth trying to chase shitcoin of the day. That's not going to help you. So just find those assets that are relatively stronger, that you have the comfortability of actually being able to trade. I tell people this all the time. If WIF looks like this, what that means is that you can only see that uptrend. And I know it doesn't look like a lot, but that's a 40% move. You can only see that 40% move on something like the 5-minute chart, right? Or at least I can, because that's where my 5-minute 200 moving averages are doing. So I'm not comfortable with going and trading the 5-minute chart and staring at screens all day with, a 32-ounce cup of coffee and watching, a white chart move up and down on the 5-minute for 8 hours. I don't really want to do that. So
you're describing my life, Mercury.
Describing your life. Yeah, I'm not that guy, pal. So I'm not going to do that. And again, it's cope. It absolutely is cope. I'm going to sit here and say it's too parabolic for me, right? It's like Hasaka said, the worst thing you can ever say is it already pumped. And I'm that guy. If it already pumped and it's too parabolic, I will happily sit coping on the sidelines, waiting for some kind of deeper pullback, right? That's a nice retest of this little range high. I absolutely can come in and start to trade that. And that's very fruitful. And that gives me, a nice 30% relief bounce. It doesn't even do what I expect it would do from there. And it still gives me 30%. But yeah, I would absolutely happily sit coping as this trend is the only thing that is really tradable for that entire, 60% move. It's not my style. It's not who I am. And by lying to myself and trying to force myself to be something that I'm not, I'm actually hurting myself. I'm actually handicapping my gains long term. Then if I just kind of, ask myself, what is my innate nature? Who am I as a person? Am I truly risk averse, right? Do I feel more comfortable trading higher time frames? And as long as I resonate with that, I'll probably do better in the long term. That's my philosophy, at least. And again, that might be cope. It absolutely might be, but that's the way that I think about it.
Yeah. I mean, one of the things that, I added to my system middle of 2022 was exactly that. There, I realized I came into crypto for the parabola, right? And I always found myself looking for structural pullbacks and not being comfortable chasing hourly trends or low time frame trends, which is why when I saw, CBS and Pierre and these guys crushing momentum middle of 2022, I was like, I need to go learn from them. And that's how I applied the Pierre system, and let's go to WIF, that exact trend that you pointed out right here, right? It's just carried by the 4-hour trends, right? So I actually was able to trade this on the way up versus, 2 years ago, a complete inability to trade this on the way up, right? I would just wait and probably buy this pullback. And now I'm like, I want to be more hands-on. I think that I can extract more value from this market. So that's one of the things that drew me to trading trends. And I think you would probably agree as well. That's probably one of the reasons that you're trading with trends, is so that you don't get like completely boxed out of a parabolic market.
Exactly. Absolutely. And if you switch back over to my screen, I have a great example for you. Where I do force myself to do something that I'm not all that comfortable with, just because the opportunity is so extreme, right? So somewhere over here, this gray box is a 10-month-long range high for Solana at around $25. Well, this is that local trend, the 30-minute 200 moving averages. I start to be able to acknowledge that this is the trend that I need to be watching. And I'm not going to get a pullback into this range high unless this trend breaks down. So there's nothing telling me that I'm going to get that pullback into this range high. So as long as 30-minute 200s are still being held, that means that I can go and trade them. If I decide not to trade them, that means that I am falling victim to it already pumped, it's too parabolic, I don't want to touch it, I'm not comfortable, right? But the context was, if Solana's breaking out of a 10-month long range high, we can kind of just scale the assumptions to say we probably just go to whatever the next level is. Next level is 200% higher. Do I feel, is it that serious? Do I really don't want to buy 30-minute 200s that badly that I'm willing to miss out on a 200% move? Nah, I'd rather buy the 30-minute 200s. And if it breaks down and I get to buy the range lows too, but I have to come off of a loss, right, into that range high being retested, so be it. But I'd rather not miss out on that 200% move and then look at that trend. Right, just absolutely beautiful. And then it gets chopped up and we form a range, but eventually we do get to that $80 region. And micromanaging the trade throughout there helps me keep some of that profit into that test. But yeah, I wouldn't have been able to catch this really, really lucrative trade, one of the better trades in my career, if it weren't for having the stomach and the courage to be able to adapt to the volatility of the market. And then the only way that I was able and willing to actually want to do that is because look what I'm potentially missing out on if I decide not to, right? And I was like, damn, I really don't want to miss out on that move. So I got to, try and do something. And so that was my attempt. And it just so happened to work out very nicely.
Yeah. Let's catch up with chat. I've been ignoring chat the entire stream so far. Let's see if there's anything in here. I know I saw Jingo talking about SAGA earlier. I wanted to look at that actually. Do you know anything about SAGA, Mercury? I've been hearing this name tossed around a lot.
I don't, but Wabi and Avocado were talking about it in the Twitter space yesterday. And both of those guys really know what they're talking about. Yeah. I think Jingo knows what he's talking about too, doesn't he? Isn't Jingo a killer?
Jingo also fundamentally finds like these plays very early on.
Yeah, so I mean, three people that are all saying the exact same thing probably want to take note. And also the chart looks pretty good.
Yeah, it's in that big booty accumulation pattern after the airdrop sell-off, right?
Yeah. Put in a higher high and broke out of basically the only resistance level on the entire chart with this move just now.
Yeah.
So I would say it looks pretty good. So if you're telling me the fundamentals are good, I agree because the chart is headed to the top right corner. But yeah,
it's very clean on the 4-hour trend too. It's like the last, let me pull my chart back up. I'd say this is like the last little hip checkpoint, right? Breaking out of a range, tagging like the anchored VWAP from listing, a little bit of supply overhead. So I wouldn't be surprised because of how the market's pumping right now on Saturday into the weekly close. And I think Bitcoin is going to be tagging that underside. Yeah, we're almost there, right? I feel like this would be a nice place to like close the weekly and start the weekly a little bit bearishly. So may get some nice entries on SAGA next week if we're bullish on that. But yeah, man, I think this is the period. I'm remembering last cycle and being a participant like super late in the cycle. Like I didn't buy altcoins until April of 2021, literally the top. I mean, I bought Bitcoin and Ethereum pretty early on before their all-time high breaks. I bought Ethereum at 500. I bought Bitcoin at 16,000. But, altcoins, I started buying in April 2021 and got wrecked. And I remember just mentally tuning out for that summer and just like, it'll be fine. Like, if it goes to zero, it goes to zero. Like I messed up, like whatever. And just learning about fundamentals. Spent my whole summer studying blockchains and studying Bitcoin and studying proof of work and understanding all these differences and be like, what did I actually buy? Am I actually here for the long run or am I leaving? And my biggest regret for the double bubble was not paying attention to what was new in crypto at the time and missing stuff like Jewel at like 5 cents or whatever, because I just simply was not paying attention to the new and shiny stuff. And I'm equating like this current period to that period where the stuff that's going to outperform from now until the end of the cycle is being like those structures are being built right now. So like you can't just turn your brain off and be like, I'm gone for 6 months, guys. I'll be back when everything's hot again. Because I think you're gonna miss all the new and shiny stuff. Yeah,
that was my biggest downfall of the last bull market. Was definitely missing out on the new and shiny stuff, and it was just a byproduct of being lazy. Honestly, it like my Twitter timeline has put me on to everything. People give their Twitter timelines a lot of crap. I do too sometimes. It's all jokes, but really my timeline is pure alpha. You name a single play that has done incredibly well anytime in the past couple of years, my timeline was talking about it before it was cool. So a lot of what tends to happen is people see that and then they, take on the inverse mindset. Oh, it's overcrowded. But my timeline has put me on to everything early. Whether or not I've been able to make money out of it is a different story. But prior, when I was still early in my career, so last bull market, I did just miss out on a lot of stuff because I was too lazy to take the 5 minutes out of the day to go, oh, what is Binance Smart Chain? I didn't do that. So I just missed out on a ton of money. I missed out on name an airdrop. I missed it. Like, dude, I clearly remember people saying, how did you miss Sushi airdrop? How did you miss Uni airdrop? They were literally spoon fed to you. You didn't take 2 seconds out of your day to go, use these protocols. Yeah, man, I missed it. I don't know. My entire personality is crypto, and somehow I missed the easiest airdrops of all time. So it's like, I really tried to combat that, the past year or two, and it's really paid off. I missed the SAGA airdrop by 3 days or something stupid. Dude, so I'm coping hard on SAGA. But
speaking of airdrops, last summer I missed the Milady's initial run, even though I knew that was like a big strength of mine. So one of the things I love, one of my favorite trades is if you can't kill something, it's going to come back stronger, right? If a community is like dedicated and loves a coin, a project, an NFT or whatever, and it undergoes a FUD event and it survives and you can't send it to zero and you can't kill it, bet on that thing, right? And Milady's had this moment last year where they had a big FUD event and they went down drastically and I didn't buy that. And then they rallied to, I don't know, 7 ETH floor, right? Because Elon tweeted something and I was coping for that whole time. And I was like, okay, anytime this pulls back into an accumulation range, I'm going to bite the bullet and buy this, right? So I just accumulated Milady's and Remilios because of that with no thought process of like reward other than they'll probably go up again. And it's crazy. Over the last 3 weeks, because of my absolute laziness to consolidate my NFTs into one wallet, they keep airdropping me coins. They sent me like hella ENA and now Omni. And I'm like, that, like crypto is such a blessing. I don't even know why I'm getting these airdrops, but apparently they decided because I own NFTs, I deserve free money.
Yeah, it's actually
that's the industry we're in.
I think people underestimate like how ridiculous this industry is and how much money is just kind of thrown around ready for you to just like, capture it. Like this is not an amazing example because it's not like anything crazy, but dude, I pre-ordered the Solana Saga phone and I've already got, half the phone paid off because somebody airdropped what was it, that Mew coin or whatever.
Yeah, I heard.
Yeah, already have half the phone paid off. I got the airdrop and just immediately sold it and was like, okay, thanks. The phone itself will probably retail for more than what I paid for it, but it's just weird. It's like, try explaining to a normie friend like, hey, I bought a phone and I'm making money. What do you mean? What? How does that work? It doesn't sound real. Like, this industry, man, no place like it. So
yeah, it's similar situation for me and all the Milady's and Remilios. They're all paid off because of all the airdrops. Like it's actually that dumb. Spent thousands of dollars on pictures last year and it's like all free now. So
yeah, I can afford a down payment on a house because I staked some Celestia and I got that Dimension airdrop. It's
yeah.
Like, what do you mean?
Similar.
Celestia went up 150% from where I started staking it, and I was getting 14% APY for staking it, and on top of that you're gonna give me a Dimension airdrop. Like, what do you mean?
Yeah,
how's this real?
Such a blessing, dude. Count our blessings. Like, I love anytime I see you or anyone else like Pierre post stuff about gratitude maxing, right? And blessings, because this market is such a blessing, dude. Of course, we have to deal with these drawdowns, and of course, we have to deal with, headlines that we don't like and our coins going down a bunch sometimes if we don't perfectly sell tops. But, when it's good, it's so good. It's almost like unbelievably good.
Yeah, it is. Every single day I wake up and I'm grateful that I get to click buttons for a living, because if I weren't clicking buttons for a living, man, I'd be doing something else and I wouldn't probably enjoy it nearly as much. So got to be a gratitude maximalist. And I think that goes a lot into say like, and obviously this might not be very applicable today. It's kind of rude to say, but I always say grown men used to go to war and now they ask me how to reduce FOMO.
Yeah.
right? It's like, dude, just show some appreciation for what you already have, and then you're not constantly yearning for more and being greedy, and then making impulsive, stupid decisions and finding yourself in bad situations, and you negate all that. You stop falling victim to the same losing cycle over and over and over, just because you have it within yourself to express gratitude for the things that you already have. So you have the ability to click buttons on a screen and watch a live stream of two random dudes rambling about crypto markets. You're already doing better than 99% of people. That's the way that I see it. So,
yep. So thus asked, when you say bottoming structure on Bitcoin, can you explain what we'd be looking for, whether it's a sweep of the lows or reclaim of levels? So yeah, I can make it super simple here. Every single mega risk on rally that we've seen on Bitcoin so far this cycle has had to do with Bitcoin bottoming around weekly trends, which is the daily 100, daily 200 EMA, right? This was our big, capitulation into the USDC depegging. This was that, 2-month crab that we experienced last year. The second part of this was a little hairy for me. I was a little bearish down here and did not flip mega bull until we reclaimed these on the weekly, right? This is when it was like all signals, like let's fucking go, right? Once again, ETF sell the news, wicked right into the daily 100. So my bias has been when we lose daily trends, we look for weekly trend retests, right? So we lost the daily trend, we lost the H4 100, H4 200. We're looking for the weekly trend or the daily 100 to be tagged. If we draw a range, it all starts becoming super confluent, right? We have range lows, we have a big wick into 59. We've been front running it a bunch. If we find rejection, so let's bring it to where we are now. If we find rejection in this area, and we end up bleeding back down to the range lows, this is an area where I want to be, again, a hyper bull. If we do not do that and we start reclaiming the point of breakdown, and this is the point of breakdown because this is where we lost the 4-hourly 200s. This is where the devastation of selling started to occur. This is where altcoins basically went to zero. If we start reclaiming those big points of breakdown, I would say bulls are right back in control. We'd be reclaiming daily trends, and it's probably all signals go. Like let's start a new risk on phase. So those are the two places I want to position. If we want to summarize that, don't be hyper bull at range highs, be a hyper bull at range lows. If you're missing, if you're de-risking at range highs, wait for a reclaim of the point of breakdown. These are the ways that I'm going to see Bitcoin bottoming. And there are some hints right now that we could be more bullish than we expect. And I think that's just with the reclaim of the 4-hour downtrend, right? Whenever we reclaim 4-hour downtrend, we're either doing one or two things. We're reversing or we're putting in a range or a bottom and an accumulation range. So the two bullish points here is either we're forming an accumulation range at the lows, or this is actually going to be our reversal point. But this area where we're at, this is for me to take profits. This is not for me to speculate and open new longs and fresh longs and then get super bullish. I'd rather do that down here, which is what I've been doing, or a little bit higher. So that's how I see Bitcoin bottoming. Mercury, if you want to comment on that.
No, that was a great analysis. Yeah, I mean, when you go and compare to my BTC analysis, is going to be a lot of the same story. And like how you said, losing a daily trend allows for a weekly trend retest. That is just a different way of saying snowball to snowman. So like filling in the gaps of, here's a significant event, and then now that's my new context. Here's my new perceived, set of probabilities to the next outcome, which would be a deeper pullback. And then all throughout that space, my bias isn't really shifting all too much because nothing's really changed. So yeah, it's essentially a lot of what you said is going to sound eerily similar to what I would say. But yeah, it's the same gist, it's the same idea. 4-hour 200s reclaims probably the thing that allows us to say, oh, you know what, that probably is the bottom, just as we said, down here, and just as we could have said, down here. This time would have been, we needed to get back above, this like range high along with the 200 dailies. So that was a pretty scary moment when we start losing 200 dailies. That's, makes it look like, okay, that was the echo bubble, and we're going to go, significantly lower because we lost a pretty significant high time frame trend that we had been using as support for like weekly structure, right? So the weekly bottom. It's a higher
That
low
was
on the weekly,
the
higher low on the weekly.
exact same moment for me where I'm like, I'm not going to buy this accumulation. And I didn't. And I did not add anything at 25K or 26K in that range in September and October. I waited until that breakout. And that's where I packed on all the risk. And, you know, in the moment, it felt like crap. It felt like, man, I missed the bottom, man, these things are whatever. But just like, you know, getting over yourself and just playing the system and be like, we're risk on, let's fucking go. Like, look at the reward that we received afterwards, right? So it could be the similar situation right now for people that are like, wow, well, I missed the bottom. If we reverse from here, like, oh my God, I missed the bottom. Well, look what happens historically when you reclaim levels in a bull market.
Yeah. And you know, the worst thing that anyone could ever possibly do is use variance to determine whether or not what they did was a good decision or a bad decision. So like, and this is a heavy concept. I got to try and TLDR this, but let's say you buy the reclaim of 4 hour 200s here, or you buy the range high breakout and you're like, you know, oh, it looks like an uptrend, smells like an uptrend, trades like an uptrend. It's probably going to uptrend, right? If it has a high, has a higher low, has a higher high, it looks like a breakout, it's probably a breakout, right? And then we do this and you're like, oh my God, I'll never buy the breakout again. I'm never buying the reclaim of the trend. I'm going to try and call the bottom next time. And that way it's like, dude, come on, right? It's sure it didn't work out that time. That's why we manage our risk. It's not always going to work out, you know, with, you know, rainbows and butterflies and dandelions 100% of the time. You have to account for what you're perceiving to be the lower probability outcome playing out and then ruining you, right? And forcing you to accept a loss. It is what it is. But the times that it does work, man, does it work beautifully, right? You break out of a high time frame range, you reclaim 200 dailies, you've already reclaimed 4 hour 200s, you have everything, you know, wind to your back, time to go to 30K. Oh, we broke out of 30K too? Okay, it looks like a breakout, trades like a breakout, smells like a breakout. It's probably a breakout. It's probably going to go to the next level, and then it works, and it goes to the next level, and it works. And you assume it goes to the next level. Oh, it doesn't work that time. It must be a terrible way of assessing the market. No, that's not how that works, right? The times that it works, it plays out beautifully. The times that it doesn't work, your risk is managed, and so you're playing into an asymmetric kind of risk and reward kind of way of thinking. But yeah, you just got to allow yourself the grace of adapting and get used to and comfortable with buying higher.
Yeah,
you have to. I mean, it's psychologically, it's a massive barrier. But if I have not mastered the concept of being able to buy higher psychologically, I would not have any gains this entire past year. I would not have made any money at all, right? I'm a trend trader. I miss out on bottoms frequently. The only bottom that I have bought, and maybe not like, you know, that doesn't count. That's a high time frame trend retest. There's context there. We're still bullish on this time frame. I'm allowed to come in and buy this region, and I would have bought the bottom. That's fine. Only bottom that I actually bought was here, and it was that fluke. So I don't buy bottoms. I always buy, you know, that next shift of trend. I'm not saying, you know, this is 4 hour 200s. That's a bottom. I buy this, right? That doesn't count. But what I'm saying is you have to be able to buy higher. You have to get comfy with that idea. And, you know, granted, this market is so damn abundant that oftentimes it's not going to matter whether you bought the bottom or 10% higher than the bottom.
Agree. So the next question we got here is, what are your thoughts on stop loss placing? Saw some bigger accounts like Smartest Money shitting on putting it under the wick. Yeah, so when I traded a lot of price action, that's how I would place my stops. I would always place them above or below a wick if I'm shorting or if I'm longing. The more and more trades I've taken, the more I understand what the market's trying to tell me, the more I trade on invalidation instead of hard stops. So if I understand what the market's trying to tell me as far as like, you know, let me pull up my screen here. I can draw it out. Right. If I think for some reason, we'll just use this example. You know, I want to long above this level, right? I want to see acceptance. If price starts bleeding below, I don't need a specific wick to get hit because it could just be a stop run, right? What I want to see is price accepting below. I want to see it like spending time underneath a level, And that would be for me an invalidation. I don't need to wait for a specific wick that's sitting here to get stopped. I don't need to get stop run on a wick and have price to reverse. I need the market to tell me it's breaking down low time frame trends. It's not respecting levels. It's deviating above and below. And another thing I like to do, what did I do there? Another thing I like to do is trade off of like failed expansions, right? So if we get a compression, right, and there's a big expansion leg, I don't need to look for a wick. I can just basically say this is a massive 4-hour expansion candle. I don't want to see this retraced. If we're really strong, only half of this should be retraced, right? So if we start, breaking down below this and we're retracing all the way to the bottom of this, I'm saying we're not in a trending environment. We've completely absorbed all of the strength of the buying of this. So I can just place a stop right here, or at least an invalidation. That's the way that I look at trading nowadays. I don't place them above and below wicks like other people anymore.
I always say your invalidation is the same inverse reason as to why you entered the trade in the first place. So if you're buying the breakout of a key level and reclaim the 4-hour 200s and shift in 4-hour market structure, let's say, then your invalidation is losing that key level, losing the 4-hour 200s, and breaking that market structure. So that's how you know when to get out of that trade. So you can place that stop loss wherever all three of those things happen. That's very nuanced though, because a lot of the times, you might have, I'm buying because of structure, I'm buying because of a moving average being reclaimed and a level being reclaimed, but you might have your moving averages are 2% away from your entry. Your level is 1% away from your entry. It's all in the same region, but your market structure is 20% away. And it's like, at that point, you have to use your discretionary opinion as to where do I want to place my stop loss? Because I can't put it negative 20% lower from price because it's going to ruin my RR. It doesn't make any sense. But I don't want to put it, 1% below the 4-hour 200 moving averages. So you got to find somewhere where you can logically assume that once, your thesis starts to break down, we'll probably go and fulfill your entire invalidation anyways. So I call it scaling assumptions. So we lose 4-hour 200s, we lose this key level, we'll probably pull back negative 20% lower and create a lower low on the market structure and break that too and fully invalidate me. But something that BitBit is a legend, man. He's not as frequent on Twitter anymore. I know a lot of people in this class don't really, he's not main character or anything, but dude, he's one of the greatest crypto traders of all time.
Is he ever wrong when he's bullish after puke? I've never seen him be wrong once, and that's probably alpha that I'm sharing with you guys in chat right now.
He's ridiculous. He's like,
put him on notifications.
There's levels to this shit, and he's definitely on another level.
Yeah.
But he said something that stuck with me. He said this a couple of years ago. He said, "Stop using stop losses as your invalidation. You know when you're wrong." Yeah. And so I don't use that for, derivatives trading, because oftentimes I can just have a hard set stop loss at, the inverse reason as to why I entered the trade in the first place. I can just have it, behind market structure low and below moving averages and below key level, and that's fine. But for my spot positions, what I'll do is I have the invalidation. And so I can say, okay, I want to see a shift in trend. I want to see a loss of, this level.
Yeah, exactly.
But what is your discretionary opinion on what does a loss of this level mean? What is a shift in the trend? It's like, okay, well, I have to see it though, right? If I see it, I'll be able to spot it, but I can't tell you what it is. I can't put it into words, but I just know that when my brain sees it, I'll be able to say, all right, you know what? I'm wrong on the trade. I need to cut. That's truly my invalidation for spot swing trades, is when my discretionary opinion, I can come in and manually input, all right, you know what? We've shifted the trend. We've lost this key level. Market structure's, about to break, whatever, blah, blah, blah. But I will always have a stop loss as a failsafe. I don't think that people realize a stop loss is there to do exactly what it sounds to do. Stop your loss. You are not allowed to lose more than this amount. So it's a failsafe. I have my manual invalidation, but I'm also accounting for, hey, what if I'm asleep, right? What if a war news event comes out and the market just decides to sell off negative 30% in 4 hours? and I'm sleeping as that's happening. What am I going to do? Well, I'm screwed at that point. Now I'm a bag holder. Now I'm a Telegram community member, right? I don't want to turn into that dude. So I have a hard stop loss as a failsafe just in case I can't come in and manually invalidate my trade.
Yeah, fair enough. Here we go. What's the next one? Do you have tips on managing emotions when you miss moves? Well, first of all, everyone's gonna miss moves. That's part of crypto. You can't catch everything. The number one thing I would say is try to narrow your focus. There's thousands of things happening in crypto, and GCR has it in its bio: he who chases two rabbits catches neither, right? So if you have your attention on literally everything in crypto, you're gonna miss probably everything. And also understand that your feed is not catching everything, right? It feels like everyone is catching everything, but what the reality is just different people catching different things, right? We're all missing 99% of stuff all the time. Me and Mercury missing 99% of the things that are happening in crypto at any given moment. We're never going to be catching the strongest coin of the day every single day. So the tip I would give you there before you're worrying about missing and how to manage those emotions is to narrow your focus. Like, focus on 5 things. If you want to focus on 5 coins, focus on that. If 5 sectors, is going to be very hard to focus on 5 sectors, right? Focus on either AI or RWA. Make that your focus. Try to lock in all the information there. If it's going to be BRC20s and ordinals, put your attention there. If it's going to be meme coins, put your attention there. You're not going to be able to do the Solana ecosystem and the, base ecosystem and the ordinals ecosystem at the same time. You're going to miss everything all the time, and you're going to probably decrease your performance in all 3 places. So, narrow your focus down and have if-then plans. That'll be my second piece of advice, is like, if you have a plan on a coin, let's say you have 3 coins on your watch list, and one of the coins gives you a trigger at 3 o'clock in the morning and you didn't wake up, you don't want to be stressed about it because you have 2 more plans that you have for this week, right? We're not going to be able to hit everything. Sometimes we get lucky and we do, but, be more prepared for, missing, right? So like what I do is on Saturdays and Sundays, sometimes I use the stream to my advantage when people give me, chart requests and they're like, Doc, look at this X, Y, and Z. And I'll be like, wow, that coin looks phenomenal. Let me put it on my list. Let me set an alert. If this alert gets hit when I'm active, I can actionably trade that, and so on and so forth. And, just be comfortable missing. We're all going to miss. Do you have anything you want to add to that, Mercury?
No, very well said.
Okay.
Yeah, you're always going to miss things. So just get comfortable with missing out. I mean, honestly, yeah, fear, the first thing of FOMO, the first word of that is fear. So if you succumb to FOMO, then you are going to be fearful. And then when you're fearful and you succumb to that, you're going to be greedy again. So you're going to get FOMO. And then because of your greed, you're going to chase something, and then you're going to get fearful again. And it's just a constant cycle. So you have to get comfortable with missing out on things. You have to be able to tell yourself, and here's where trading is hard and where it's catch-22. The way to navigate markets is to have already been able to navigate markets. That's the tricky part. So in order to be able to say, okay, I don't need to fear missing out. I don't need to fear, I missed out on ordinals, I missed out on runes, I missed out on this, I missed out on that. In order to be able to really come to terms with that, you have to know that things are going to be okay because you have the ability to spin it around eventually. And so how do you know that without having already navigated markets? And it's tough. So you have to fake it until you make it, honestly. You have to tell yourself, like, okay, it's okay that I missed out on this. Opportunity will come. If I missed ordinals, whatever, I can catch runes. If I missed runes, there'll be something else. But yeah. And like I was saying, it's not like I was plotting on Dogecoin being one of my better trades in my career. It's not like I was plotting on INJ giving me a pullback into 4-hour 200s, at $14 before it rips into price discovery. It's not like I spent all my time and effort and energy for months waiting on that to happen. It just came to me one day, right? And it presented itself. And then, you see your feed talk about something, go explore it a little bit more, and don't be lazy. And 90% of what they talk about might be things that, are here today and gone tomorrow and are total rugs. But maybe, 10% of the stuff is a dog with hat and it runs absolutely crazy multiples, right? So you just have to be able to find your way around navigating the market and make sure that you're putting yourself in a position where you can at least have the ability or the option to take advantage of every opportunity. And if that truly is the case, then it's inevitable, in my humble opinion, because of the law of large numbers, that you will eventually get lucky, because there's so much opportunity just constantly passing you by, and you are in a position where you might be able to catch even one of them. And that one is how you get lucky and then change your life, and now you have a cool story, and then you become a crypto bro and whatever. So you really just have to, I don't know. It requires deeper sense of like emotional discipline. But until that is truly a thing that you can really tell yourself that you have, you got to fake it until you make it. And then you'll start to see as that way of thinking does reward you at least to a better state than what you were previously in, where you're constantly getting FOMO. And then because you got FOMO, now you bought the top and then we're down negative 20%. That should have been your entry, but now you're fearful. So you sell the bottom and then we go up again. It's much better than that. So fake it until you make it.
Yeah. Hey, did you catch Ansem's fight yesterday?
No, I didn't.
Okay. I think that was for the best. But I think it's funny that people actually opened shorts on Whiff yesterday because of Ansem's performance. I had a bunch of friends that were like shorting Whiff like right on the fight. They're like, wait a minute, this is terrible. And every single one of them is underwater right now if they didn't take profits.
That's hilarious.
It's just a funny little tidbit. Man, like, is there any other questions? Did we catch up on everything? I think we have everything caught up. Doc interviewing Doc. No. If I sound like Mercury, I've accomplished something in life. I have a very prepubescent voice compared to Mercury.
Hey man, people tell me that I sound like Maine all the time. So you can
I don't
be a
hear
trio
that.
now.
I don't hear that.
I don't hear it either. I don't think I sound
voice
Canadian. but yeah, people tell me that all the time.
Maine kind of has like a little bit. He doesn't have a lisp, but he has a very like funny way of talking. Very unique to him. But yeah, should we go through some chart requests? I haven't seen anyone spamming tickers, which is kind of refreshing. Typically, people are always spamming.
Nobody has it in them.
Everyone got rinsed. Yeah, dude. There's no Apu shills in chat today.
Oh my gosh, man.
Mercury, did you know that you posted an Apu? That's not actually a Pepe.
Dude.
That's an Apu.
Dude, that community is probably the most toxic out of every.
I don't know about toxic, but they're so like
they're like friendly on the front. They're like Sour Patch Kids. They're I mean they're sweet and then they're sour actually. Like they start off, oh haha, Mercury, you posted an Apu, and then somebody will be like, well, what do you mean? What's the difference between that and Pepe? And all of a sudden it just changes. Like this like swarm of community members just come out and you're an idiot. You don't know the difference between Apu and blah blah blah. Yeah, I'm like, dude, I'm not buying you guys coin for this reason.
Fighting over meme coins is probably the lowest like IQ behavior that's in crypto. I don't think there's anything lower than that. But yeah, man, I think it's also funny that like, you know, I don't know if this is even relevant to the discussion, but it's funny that the Pepe and Apu communities are fighting when they're the only two frogs in crypto. Like you would think that there would be some kind of allegiance or alliance, but they're not willing to accept each other's coins. And I'm like, you guys keep bickering. I'm just going to continue trading the charts and making money off both these coins, but you guys do your thing.
Yeah.
Anyways, let's take a look at some charts here. We haven't done much charting this entire stream.
Yeah, I'm happy to go through some shit coins.
Man, let me just go through, because I've done this on Twitter a little bit, but I haven't done this on stream because we haven't been on stream. I just want to be on the record and say that I think this is giga opportunity. I think something like this on Solana is not unreasonable over the next 6 months, or maybe longer, maybe shorter. I think from my experience and from my back testing and from my actual trading, weekly trend retests in a bull market are your last line of defense. this is the place where you really need to step into the market and see if the market agrees with you. And the risk to reward in betting in these situations has been phenomenal in prior cycles, going back 2 cycles, this own cycle. Bitcoin's own weekly trends 4 times have produced like unbelievable returns so far this cycle. Of course, it's not going to work every time, but I like the RR here, and I'm focusing on coins that are holding weekly trends. There's so many coins out there that have just absolutely dumpstered through it, and I don't even care about these. Like, I might just take INJ off of my watch list at this point, because it was one of the strongest coins while Bitcoin was weak last summer. It was one of the coins that was coiling and coiling and coiling and was just ready for the fireworks when Bitcoin went risk on. And what is it doing now? It's losing its weekly trend. So if this is the picture, and if something like this squiggly forms where we're not able to reclaim, prior range lows, not able to reclaim weekly trends, I'll probably just take INJ off my watch list and not worry about this coin. But there are coins that are in narrative, like Prime, that has been a gaming coin that's been hot. This is something that I want to pick up off the weekly trends. What else? Ondo has been probably the only coin that's held its daily trend that I have on my watch. It's the only coin that has been so strong that it's held its daily trend amongst all of this chaos. And we talked about Render obviously early on, right? This is another spot bag that I'm repositioning on, and then Solana, right? So these are my 4 picks for the second half of this bull market. This is where my concentration of capital has gone over the past week, and these are the bets that I'm taking, right? If we're going to swing, we're swinging for the fences for the second half of this bull market, and I do not believe the top is in. I think we had some top signals, but I think that's kind of like the early. We're kind of like in the early late phase of the cycle. Like, this is where retail is getting interested in. And just like a personal tidbit from my real life, people didn't really care about crypto until literally February, March, and April, these last 3 months. And if I use my own experience of last cycle, I didn't get interested in crypto until November 2020, right, where Bitcoin was about to break all-time highs. That's where I got interested, and I didn't actually start buying altcoins until April of 2021, right? So there was a big wipe in May 2021, and this might be not drawdown wise, but maybe in hindsight will be remembered as our kind of mid-cycle wipe. And I think higher highs are coming on a bunch of coins. So these are the coins I'm focusing on. And the last one I didn't mention is Pepe. It's another one that's just holding, it swept the low. It's sitting right on the weekly trends. It's putting in a lot of support in this region. It's one that I want to bet on for at least range highs and then eventually trend continuation.
Yeah, I mean, you kind of took the words straight out of my brain. Yeah, no, I totally agree with you. I don't think the cycle's done. The reason I've been such like a doom poster on Twitter is because whilst I don't think that the cycle is done, and I do think that weekly trends hold, and we can go on and Solana can see new all-time highs and stuff like that, and maybe we can get Doge to $1 and all that kind of stuff. I don't think that we can just throw that into the garbage just yet. So I do see that happening, but the market doesn't care about my thoughts. And what I have to acknowledge is what's currently happening. What's currently happening is that BTC is bearish on the daily, and Solana is bearish on the daily, and Doge is bearish on the daily. And right, all these higher time frame coins are all these coins on higher time frames are still downtrending, and they still have, I would argue, they still have a little bit of room to go if they wanted to. Right. So, I mean, last time around, BTC, shifted daily structure bearishly or whatever. It only led to a negative 10% drop. What eventually happens is you beg, oh my gosh, I want to buy 200 dailies. I want to buy 200 dailies. Please give me 200 dailies. And market does this, right? So as long as the higher time frame trends remain bearish, then I'm going to respect them as such. But I'm still going to gradually adapt. So something like Solana reclaiming hourly 200s is a good local trend portrayal for me to start scaling assumptions to, hey, maybe we can see a bigger relief bounce here, right? And maybe we can see, at least a bearish retest. So it's reverse engineering that snowball to snowman kind of way of thinking now. Maybe we can see a bearish retest of these 4-hour 200s, and then we'll see what happens here, right? Even if Solana, whether we're trading here or current price or 10% higher, we're still bearish on the daily for Solana. This is still a high, a low, a lower high, a lower low, and this would still be a lower high. So we're still bearish We still threaten downtrend continuation. But with that said, as you said, high time frame trends are still bullish, right? Higher time frame trends. So weekly trends, right? Maybe in the grand scheme of things, this is just a dip, and then we can reverse, and then Solana breaks this region, we can rip it into price discovery. I don't think that's crazy at all. I don't think that's unfathomable in the slightest. This was that high time frame trend, that daily trend along 4-hour 200s on Solana. We test 200 dailies, and then eventually that consolidation breaks out. We break above, right? We get above range highs. We start creating higher highs. We reclaim 4-hour 200 moving averages, and that's what happens afterwards, right? And so by acknowledging that the higher time frame context was still bullish, even with this negative 50% drop, then you at least give yourself a bit of a head start by being able to adapt to the new strength that finds its way back into the market in a more actionable manner, rather than, jumping in somewhere in between on the hopes that this is going to be the bottom, and then allowing maybe negative 20% drawdown just for us to possibly not even hold that region at all, right? Which, if you did that here, then you don't really care because the bull market rewards you because we're still in a bull market. But if you did that here, you kind of hate your life because then we draw down negative 99%. So it's variance, right? We have to have a sound way of navigating the market regardless of whatever the market does. And that's the way that I'm navigating mine.
Good to stay disciplined there and recognize that one day it is all going to fall apart, right? So can't just have.
And that's the thing, is that I'm not expecting it to happen, right? But that's exactly the point. I didn't expect it to happen in November of 2021 either. But in November in 2021, when BTC is losing 4-hour 200s and breaking daily market structure, all that I'm saying is BTC is breaking daily market structure and losing 4-hour 200s, guys. I'm not saying, oh, guys, I think this is a bear market, right? Because the last times that we broke 4-hour 200s and lost daily market structure, we didn't go into a bear market, right? It just led to negative 50% pullback. Oh, but we made a new all-time high anyways. So it's not like I'm expecting that. But if it's going to happen, then you have to see that weakness come into the market to a more significant degree, right? This is a crazy, crazy uptrend. So the fact that we broke that is not, something to scoff at. And just because it only gave, actually it looks like this, right? Just because it only gave a negative 10% difference, right? Oh, who cares, Mercury, that we broke structure and lost 4-hour 200s? Okay, well, now it's negative 30%. You're starting to care, right? Eventually what's going to happen is, right, maybe it's all the way up here and maybe 200 dailies are doing this and price is like all the way up here. And eventually what happens is it's not just negative 30%, it's also going to be negative 80, right? Every trend breaks. And I say that, and it's not groundbreaking information. It's just every bear market is met with bull market and vice versa. Every low volatility period is met with a high volatility period. Every range is met with trend. Every trend is met with range at some point, right? Every trend breaks. So it's inevitable. You have to account for it. You have to have a sound way of navigating the market. And then once you establish that, your system, your way of approaching, your way of operating, once you establish that, everything else becomes noise. Oh, I think BTC is going up because it's an inflation hedge. Well, I think it's going up because we're uptrending on all time frames and we're above, key trends and blah, blah, blah. So we're both right. And then, we're going down because the war news. Well, I think we're going down because market structures are bearish and we've clearly been downtrending for the past, week, and we broke key levels and blah, blah, blah. You're always going to be on the right side of the market because you always have that way of navigating it.
Yeah, well said, man. I think, and also the more and more extended we get from these trends, the more brutal these sell-offs are going to be one day, right? So, I think, even if you look at Solana, that's been something that's like hyper parabolic. It has been going up in a more or less structural manner. It has stopped. It's consolidated. It hasn't just gone in a single line, right? It's given us nice pullbacks into like lower time frame trends. It's given us a lot of 4-hour trend trades and a lot of daily trend trades. So I think, if we're trying to be hyper optimistic here and say that this market ends in a blow off top, I feel like we might not even be there yet, right? I feel like we haven't gotten that unbelievable solo rally where things just don't pull back. I think that may have come, maybe ahead of us, right? Don't want to assume too much, but that is where my bias is sitting.
Yeah, it doesn't look like it, but this is a 2-week long consolidation.
Yeah.
Right. So it looks small in the grand scheme of things, but that is 2 weeks where you get to buy, range lows or maybe buy the breakout of a range or whatever.
I think even right before that, the consolidation right before that had like a 25% pullback in there, right? It doesn't look like it, but I think there was like one in there that was, there you go. So yeah, it's done a pretty good job at having a very nice structural uptrend, even though it's up 10x or whatever from low to high, or even more 15x, which is wild, man. God bless this market.
Yeah, it's crazy because I wouldn't even say that this market has been brutal. Even with this sell-off, I wouldn't say this is brutal. I would say that this is pretty mild in comparison to what at least I have witnessed. Like this candlestick is pretty crazy, but it's really not all that crazy relative to everything else I've experienced in the market. And that's a negative 25%, Darth Maul candle or whatever. I'm saying that's pretty mild. Yeah, it's pretty, it's normal. It's whatever. I've witnessed so much worse in 2020, 2021. Just
Mercury,
alone.
This entire market, Bitcoin has not corrected more than 25%.
That is ridiculous, by the way. Right? That's unheard of. So again, when you put crazy. That in perspective, it's been pretty mild, I would say. I think that's a fair statement.
Yeah, and I've seen more like panic and angry emotions than ever before. I've seen more people getting wiped out this cycle in the bullish markets versus the bearish markets. Like, it's been wild how poorly people have managed their risks so far, and how how much the volatility has decreased from prior cycles. Like, I tweeted something out the other day that was like, our ancestors, just poking fun at like the OGs, used to eat 40% drawdowns for breakfast. Like, toughen up, Buttercup. Like, this is nothing. And even when I look at stuff like war headlines, like, I know altcoins got bodied 50%. I know lower caps went 60%, but it still doesn't feel that bad to me. And I don't know if I've developed an immunity to this, but like, obviously the initial shock of seeing things go down, like, heightens your emotions. But then afterwards things calm down and you just look at charts and you go, yeah, I mean, they're sitting in weekly trends. We're okay. Right. I'll get concerned when weekly trends break. Right. I'll get concerned when news doesn't just drop us back into range low on Bitcoin. Right. When we break stuff down, when things get a lot worse. Okay. I'll listen to you then. But right now, I don't know. I'm more optimistic than I was last month. Last month, when we were super heated, I was a little bit cautious. But right now, I have no reason to be hyper bearish.
Yeah, I wouldn't say I'm hyper bearish. I'm definitely not hyper bearish. I'm just showing the warning signs in the market in a very rational and logical kind of manner, unapologetically. I'm just respecting my system. But yeah, like you said, I find it crazy that this candle is the greatest liquidation event in crypto history.
Yeah,
I sit here and think about all the stuff that I've experienced in my 7 years of being affiliated with crypto, and I'm like, this is the greatest liquidation. Like, monetarily, most money got wiped out here.
Yeah.
How? And so I think that really is a testament to how poorly people do manage their risk, as you said. And I think a lot of that is stop trying to treat the symptoms and instead cure the cause. How come we're not buying range breakouts here? How come we're not buying structural shifts in trend and reclaims of key levels here? How come we're not buying the breakout pullback retest of this key level, right? How come we're not buying this range breakout? How come we're not doing those things, but we decide to, refinance our houses at this high, and then that negative 10% drop is the greatest liquidation event in crypto.
You know what it is? It's at bottoms. People are very scared. They get very capital protective, and they go, well, yeah, of course I need to buy this bottom, but I'm only going to put 10% in. I'm only going to put 20% in. I'm very scared. Things can go a lot lower, et cetera, et cetera. Think news headlines are bad. Like, people are very scared to put risk in at bottoms. And then as the trend goes up, they go, damn, I wish I could, give me a 5% pullback. The market doesn't give it to them. They start adding into things that they don't love necessarily. For example, they miss Solana. So they're like, okay, well, what else can I buy? Say that's kind of beta to Solana, right? So they put their money in lower conviction things. The higher and higher things get, the more cash they have. They start saying, okay, let me deploy in more risk things because I missed the good stuff. Let me allocate to more and more risk. And at the tops, they start saying, well, okay, I'm out of money and this and that. Let me start leveraging, right? How am I going to catch up to the people that bought 38K? We're at 60K now. Let me just go 2x leverage. Let me just go 3x leverage, right? This is the psychology that people use in bull markets because they simply just cannot buy when things are like retesting high time frame support and high time frame MAs. Because like bottoms are always formed with fear, bottoms are always formed with bad news, and tops are always formed with like euphoria and great news, right? And eventually you get news absorption. You start seeing things range and get really heavy at tops instead of being that same single kind of low time frame trend all the way up to the top, right? It's just the same thing in reverse. So I think that's why you get those massive liquidation events at the tops, is because, you know, people have cash to deploy, they deploy it into the horrible things, then they leverage it at tops thinking that they need to catch up.
Yeah,
So
it's like constantly trying to overcompensate for your previous self. The way that your previous self positioned, you're not satisfied with it, so you try and overcompensate, but then that ruins you, so then you feel bad, so then you try and overcompensate for that. This is a constant cycle. And it goes back to what I was saying, man. Like, stop trying to treat the symptoms and just cure the cause, right? Have the ability to have conviction in your system from the get-go. Be able to call, you know, a range breakout at 45K, and then maintain the same stance and be bullish at the top, just with the same adamancy at 73K. Right? Yeah. It's the same argument the entire way through. This is all, by the way, this is what hourly 200 EMA's trend looks like. So it's like, dude, come on, that's ridiculous. That's a 75% move or something stupid, right? And so it's the same argument all the way through. You have to find a way to detach from, oh, when number goes up, I'm more confident, but when number goes down, I'm less confident, right? You have to have some kind of discretionary way of being able to dictate confidence with significant events, whatever you're deeming a significant shift in an event. So, oh, this is a structural shift on the daily. Oh, we reclaim 4-hour 200s, right? And then you skew the perception of probabilities and you go from there. And then the entire way through, as long as that argument remains applicable, then you keep making that same argument. And yeah, you'll probably be bullish at the top, but it's much better than, you know, constantly getting whipsawed or falling victim to, oh, that's a sweep of the highs, this must be a top, and then having FOMO and then aping in and then closing at the low, but then aping in again, and then getting liquidated, and then, right? It's so much better than that, at least in my opinion. So I'm not the guy who can come in and, you know, look at a chart and just say, oh, I feel like this is going to be a bottom, and then, you know, it bottoms. Oh, I feel like this is going to be a top, and then it tops. I can't do that. I'm not alpha. 7 years of experience, and I can't honestly, in good conscience, tell you that my thoughts have greater merit than anyone else's, right? Sometimes I'm right to uncanny accuracy, right? Uncannily. How the hell did he predict that? Like this candlestick, I even said somewhere over here, I said the next negative 10% pullback is going to be the greatest liquidation event in history. Yeah, I literally called it like 2 or 3 days before, and then it happened. I still can't believe it. Uncannily accurate. Oh, but at the same time, you know, somewhere in here, I said, oh, I think that Ethereum is going to start to outperform. Couldn't have been farther wrong, right? So sometimes I'm alpha, sometimes I'm just like a random pleb, and like, why the hell would you ever care about my thoughts? But I acknowledge that. I know that I'm not alpha, so I just give myself a foolproof kind of way of navigating whatever the market's doing.
100%, man. Yeah, well put. Do you want to wrap it up there? Do you have any closing thoughts you want to share?
I don't have any closing thoughts. I haven't looked at the chat in a minute.
Actually, wait. Yeah, we do have one. Finn, are you in Paragon? We have a Finn in Paragon. I don't know if you're the same one because I don't know your YouTube name, but I covered how I, you know, what percentage of my portfolio I risk. And I want to say that it's like pretty discretionary, and it also depends on how much capital you have in your trading portfolio versus your spot portfolio, right? So everyone is going to have a different amount that they actively trade. For me, it's less than 10% that I actively trade. More like 90% is always in spots. 10% is actively trading. So of that 10%, I'm usually willing to risk more than 1 to 2% per trade on that account. Like I don't believe in the 1 to 2% R system. And it is, again, fluid for me and dynamic for me based on market conditions and based on what I'm trading. If I'm trading the 15-minute chart, I'm going to be risking less. If I'm trading 4-hour trend trades on a range break, I'm betting a lot more. So I wouldn't have like a blueprint that I could give you in 60 seconds here, but I do have a video on it in Paragon.
Yeah, Finn, what I will say is the risk 1% per trade rule is really good generic advice for beginners when they're first starting out, or even if it's not 1%, if you don't want to do something, you know, in a compounding fashion, if you just want to do static, right? I risk $100 on every single trade, just static every single time. I'm going to risk this amount. I think that's good advice for when you're starting to trade. But I think as time goes on, you have to start to be able to determine what's an amazing setup, like something that's only going to come around once you're, you know, maybe 2 or 3 times a year, and what's just another trade, right? You have to be able to determine per your discretion, through intuition, through experience, through conviction, what is the difference between an A+ setup and like a B-, right? So that static risk rule is not really viable in a longer term outlook as you start to gather experience and intuition and feel for the market. So I scale my position sizes and I risk more on higher conviction bets. Mercury, what's a higher conviction bet? I can't tell you. When I feel very confident in the way that the chart is shaping up, when I feel very confident in a thesis or a fundamental play or whatever it may be, when I feel it in my gut, when my balls start tingling, right, I can justify risking more. But I can't tell you what that is because that's an intangible. So you have to come to find that out for yourself. So in the meantime, risk 1%, risk a static amount, whatever. It's great advice, but it's not viable for the reality of being a trader because not every opportunity is the same. So it doesn't make sense to have every time you know your position size be the same. Doesn't make any sense.
Yep. And last question here is basically, so do we sell this 4-hour EMA retest on most alts? I'll tell you what I'm doing. I usually don't share this kind of stuff on the public streams, but we'll just equate it to last time this broke down. So let's look at ETH, right? I was hyper bullish on ETH. My whole thesis was Q1's Ethereum's best performing quarter. I want to be long ETH. I bought spot down here. I was trading this up and I de-risked, right? Where did I de-risk? The point of breakdown, right? This is the last up candle before the daily trend broke down, right? And as we approached this, I was taking profits. I was basically saying, look, we're sweeping a high into the point of breakdown. I think there was also Monday's high or something, or previous week's high. I forget what I was trading at the time. And I completely de-risked and I got out of this position. And I was willing to accept being wrong or basically being sidelined for this move and then getting in on the point of breakdown reclaim. There was amazing 4-hour triggers here. Let's see if we can find them. Right there you go. Right, you nail it into the 4-hour point of breakdown, right? This 4-hour point of breakdown right here, the last up candle before this whole devastation of selling occurred. You have signals here on the 4-hour time frame. This is where I got long, confident with the 4-hour trend, and I would say it's the exact same playbook for me right now, right? Same exact scenario where I'm buying in the weekly trend. I'm looking to sell and de-risk as we tap into the daily trends right here. If we sweep these highs, I'll be out. In fact, I'm not really doing this on Ethereum. I'm doing this on Solana now, and I'll be closing these trades, right? I'll be fully out. And if it reclaims and we start trading above, we're bullish again, right? Same thing on Bitcoin, same thing on Ethereum, same thing on altcoins. I don't want to be long into this retest. I want to sell this retest and I want to close my position and be like, wow, what an amazing week. What an amazing opportunity that I got to take these trades from low to high. And if it goes higher, we'll be bullish higher. If it goes lower, we'll be bullish lower. We're not going to be bullish right at resistance. That's just how I'm treating this. So I'm not going to tell you what to do, but that's what I'm doing.
My approach is a little bit different. So I don't short. Let's just get that straight. I do not short this market. I haven't shorted in probably years. Just for the simple fact that I find it more fruitful to focus on only the long side, because that's really what I'm here for. And that's where the greater opportunity is. And I find it easier to just continuously ebb and flow with the market if I can just cut positions and compound purchasing power on, deeper drawdowns, which is what I'm currently doing, or watch as, number go up in portfolio because market go up. So I don't short. I won't be shorting 4-hour 200s, nothing like that. Even if we pull back negative 20% lower, I can't claim clout on that. But what I will do is I will establish positions on key local trend shifts. And then because the higher time frame context of this market is as me and Doc said, the weekly is still bullish. We're still in a bull market. So Solana can rip to price discovery, Doge can go to $1, whatever. Because that's the case, then I want to maintain some of that core position, just in case we reclaim higher time frame trends. And I don't have the luxury of being able to buy, very clean, very pretty, ideal breakout pullback retests of 4-hour 200s and stuff like that. So I want to keep some of that position. It's not like I'm going balls to the wall with the risk on a breakout of hourly 200s on Solana. It's not like that. But what I'm trying to do is I'm trying to make some amount of money from local trend reclaim to bearish retest of higher time frame trend, because in between that gap there's like 15% or so of potential reward. So I want to try and capture that, so that mentally, if we do get above that region and I'm sidelined forever because Solana just decides to rip to $250 in one candle, then I can at least say, oh, I still have some of this position because I considered the context of the greater market. And if instead Solana pulls back into 4-hour 200s after having reclaimed them, then I can add to that core position and still have a really good average entry price.
Well said, man. I think that's going to do it for the questions. So we can probably wrap it up there, man. I appreciate you for coming on the stream. It's been a long time.
Yeah.
Yeah, man. We were supposed to do this like once a month, but I think with the madness of the bull market, what I think is, like, at a certain point, there's not much to say, right? It's kind of just like ride your longs. And obviously when the de-risk moments come, those are important to talk about, but we'll do this again soon, man.
Yeah, for sure. I think, what happened is you joined Paragon and you forgot about me and you're patient with Magus and no, I'm kidding. No, congrats, man. I haven't talked to you since you joined Paragon. So really big stuff. Happy for you guys, for all of you.
Thank you, man. Yeah, it's been fun. Should we show Paragon real quick? if you guys wanna learn how I trade, or pick my brain or whatever, follow my trades, come join Paragon. You're not gonna just learn from me, but you'll learn from Magus and Charlie, who are people that I consider mentors as well. So check it out. There'll be a link in the description box below. That's the show. All right, boss. I'll see you guys later.
All right, man. Thanks for having me on, man.
Yep.